With inflation well above 2% and a strong labor market, the U.S. Federal Reserve, Fed, said it expects it will soon be appropriate to raise the target range for the federal funds rate. The Fed also decided to continue to reduce the monthly pace of its net asset purchases, bringing them to an end in early March. Notably, the new statement omitted some key details that were there in the last statement, including a mention of the Fed being committed to using its full range of tools to support the U.S. economy. Fed also noted that it would be prepared to adjust the stance of monetary policy as appropriate if asked about the currently high inflation in the U.S. during the press conference following the release of the statement, Fed Chair Jerome Powell admitted that inflation has persisted longer than we thought. "We will use our tools to ensure higher inflation does not become entrenched," Powell said. Meanwhile, after rallying right after the statement, both Bitcoin, BTC, and Ethereum, ETH, dropped sharply soon after. At 2050 UTC, BTC traded at $37 and was unchanged in a day, while ETH stood at $2 and was up 2% in a day. Meanwhile, at 2045 UTC, the technology-heavy Nasdaq stock index was down by 3.34% and the S&P 500 index lost 2.1% since the release of the statement. Commenting on the Fed statement, Wells Fargo rates strategist Michael Schumacher called it innocuous, adding that people are taking this as a pretty middle-of-the-road statement, not a lot to digest, CNBC reported. The stock market is especially vulnerable to higher rates and the removal of. According to him, while the economy will stay out of recession and the bull market in stocks will continue this year, the volatility might increase in the months ahead.